And a very warm welcome to you. We are here today to tell you why you should care about the euro. No, don't go away, please. It does need attention. It is young, some say it is sick. The fact is it's an illness that is contagious, and the next victims could be all of us. Hello, you're watching Roundtable with me, David Foster. Yes, we should all care, yet it is hard, isn't it, to worry about something so clearly nebulous. Just numbers, after all. Well, all of these people are here today to look at the symptoms, to perhaps suggest treatment, to tell us whether the patient, after all, only just 20 years old, will make it to 21.
The Eurozone is on shaky ground as political instability inside and outside the bloc continues. A European Central Bank policymaker has warned there is still a risk of financial crisis, adding we must be vigilant. A new survey showed the activity among businesses fell to its weakest in more than 4 years in December 2018. The Eurozone economy has been hit by violent protests in France, political volatility in Italy, and Germany's car industry wrestled with changes in regulations. The Federal Statistics Office revealed Germany barely escaped recession at the end of 2018. And outside the bloc, there's uncertainty over Brexit and the ongoing US and China trade dispute. Could a new financial crisis emerge from fears over the EU's economic slowdown?
Very pleased to say that joining us via Skype from Saint-Malo in France, we have Philippe Waechter, Chief Economist at Ostrum Asset Management. With me at the round table, Valentina, Romei, statistics journalist at the Financial Times, Jeremy Smith here too, co-director of Prime Economics, and the Economist, Vicky Pryce. Warm welcome to each of you. Financial journalists, economists, all experts in your particular field. So I'm going to start with the Down Market newspaper. I have here The Sun, a British paper from just before Christmas, saying the EU plans 20th birthday party for euro currency, an obscene insult. A fifth of young people in the Eurozone are out of work. Average jobless figures double the UK rate. Youth unemployment in Spain, 33.4%, and Italy and France have turned from net exporters to net importers. So the question is, it's rather like that one in Monty Python, isn't it? Which was, what have the Romans done for us? What has the euro done for us? You, Philippe, first.
Well, I think there are two things. First, everyone in the Eurozone is happy with the euro. You're talking with consumers, you're talking with companies, they are all happy with euro. That's a very important first step. The second element is that the Eurozone is still very young, and we still have a lot of things to do to improve it. Not specifically on political side. We see that there is still a lot of institutions to build on political side to have a clear Eurozone that work like a monetary zone. And it still has to come. And probably the difficulties we currently have will help to shape these new institutions.
Okay, we can look at that in some detail in the rest of the program. But Philippe, follow up to you here. If, as you say, those everybody is happy with the euro and the Eurozone, what about those figures I just gave you?
Well, you have two different things. You have people living in the Eurozone that can move from France to Italy, from Germany to Spain in an easy way. You can have business in an easy way from France to Germany, etc. So that's the first step. Of course, there are some, we have still some weakness in the current environment. You mentioned some very weak data, and we have seen recently in the Eurozone, and clearly that's something we have to manage, because what we see in the Eurozone, and due to the lack of political institutions, for example, a budget, a federal budget, we have. Everyone is trying to work with himself. The French government is working with France, essentially. That's the same for Germany or for other countries. So we have no coordinated or cooperative strategy in the Eurozone, and that's what we have to, something we have to build.
This is something that I don't really get. I'm going to get some folding money out of my pocket if I can get my fingers around it, because the euro itself is sort of a bit of a nebulous concept, isn't it? It is an idea, and the only things that most people ever see of it are some of the banknotes and some of the coins. So what I want to know is, when the EU wrote down its ideas for the euro and said number 3 was improved economic stability and growth, have we seen that, Vicky?
Well, the interesting thing about the euro is that it was trying to do two things at the same time. First of all, get political consensus in terms of bringing a number of countries closer together. It was a political project up to a point. It was
that's number 6 on this list.
Well, I mean,
it says tangible sign of a European identity.
Indeed, but it's not just the identity. We must remember that the wall had come down in '89 between West and East Berlin, and the collapse of the Soviet Union as was. And there was a Germany that wanted to reunify, and it did. But of course, the price that they had to pay was to actually come much closer to the rest of Europe and not compete, big country, on unequal terms, if you like, against France and others. So there was a political project to try and make sure that Europe was now seriously, closely together. But the second thing is, if you look at the single market, the thing that is worrying, but for example, the Brexiteers here in the UK, it is based on the free movement of people, goods, and of course services and capital. Now, you can't have free movement of capital when you have loads of different exchange rates. So one of the things that has disappeared, at least, is this terrible sort of variation in exchange rates that used to happen. So everyone who sold anything, for example, to Italy in the past, and I may stand to be corrected if that's not right, would always price things that are sold to Italy much higher than elsewhere, because they always expected the lira to devalue, and to devalue quite a lot. So you had this impossibility, if you like, of having a proper capital markets union without that single currency. So it had an economic use.
Let me put this to you. And any one of you can jump in at any point here. If you have really strong countries, which you've referred to there, and you have weaker countries there, and you put the two together, it's rather like mixing a strong solution with a weak solution. You end up with an average middling solution. But that presupposes that Germany was going to give ground, and that the weaker countries were going to be able to pull themselves up. Has that happened?
Well, I think that's the problem. You put money on the table. Money is it's nothing more than trust now, because since it escaped from the gold standard. So it's about the trust in the currency. And I think there are huge positives that Vicky's and Philippe have outlined, of convenience and simplifying costs for doing business and so on. But there is also the point about it that if you're going to bring together currencies into a currency union, it should, in the medium term, be a force for convergence, not for divergence. And that's been the problem with the euro, is that when crisis comes or difficulties come, it's been a force for divergence.
Is that because countries such as Germany, stronger countries, are saying, hang on, it's okay to have this, but don't force the pain on us?
I believe it goes back to the fundamental structure of how the euro was set up and what the rules of the game are, that there isn't a common budget, there isn't any sharing of obligations, and in particular, the central bank doesn't play the role that a national central bank needs to play.
Valentina?
Yes, the convergence element is very strong, because that's the whole idea, that the countries become more similar to each other. And that has happened in the first 10 years of the euro. There was strong convergence among all countries. So the differences in...
Can you give us an example?
I mean, the difference in GDP per capita, which is kind of a measure of how rich an economy is, has shrunk. So each country, it has for 10 years.
Until the financial crisis.
Yes, until the financial crisis. So all the countries of the Eurozone and the wider EU has become more similar up to the financial crisis. With the financial crisis, things changed. And the peripheral countries were severely hit. Now, whose fault is this? It's a difficult question, and I think there are many factors. Part of it is structural problem in the peripheral country. I mean, the euro currency can't solve all the problem. It could have helped, it has helped, for example, cross-country lending, so banks lending to other countries, which supply a source of lending if you're
Which means that country that borrows has more money to spend on its infrastructure, let us say, for example, when it couldn't have got the money elsewhere before the euro. Is that right?
For example, yes. Yeah. So it has worked in various ways, but then structural problem matters as well. And peripheral countries that had structural problem were particularly hit by the financial crisis. And from the financial crisis, you have a north-south divergence. What does that mean? It means that the north got richer and the south got poorer. Now you have that
but that's a failure, isn't it? That's a failure of a common currency if one part of a zone, in this case the Eurozone, can get richer, not necessarily at the expense of, but while it is watching a partner get poorer.
I think that is
in a second, Philippe, yeah, absolutely.
I think it is the simplification. You can't have one single, reason for the failure of the peripheral country to catch up.
Get that.
But you might argue that, the convergence that we were hoping for at some point was not happening. I mean, in more recent year, you have back a convergence trend for some country. You have Portugal that is catching up, Spain that is catching up, and Greece that is timidly
Okay, let's bring in Philippe, because I know you wanted to say something.
Well, I just wanted to say, you mentioned Germany has a strong economy, but at the very beginning of the Eurozone, it was weaker than France, weaker than the average. So Germany has taken advantage of this currency, this common currency. That's the first point. The other point is that we cannot expect that the current currency and the ECB can do everything to manage the Eurozone. What we've seen since the beginning of the 2000s is that there is a divergence in terms of productivity between France, Germany on one side and Italy on the other. And this is dependent on how each government take advantage of that and try to manage the situation.
I suppose what I'm trying
to entirely. It's a structural
problem. We should point out that Germany at the moment, it did get stronger, but it's sort of,
but
perhaps some people think getting close towards recession.
Problems to others, and with its, in my view, perverse fiscal policy, it's actually denying Europe the assets that it needs to become a stronger currency. So it's had a negative effect on the rest of the countries. Their leading person on the European Central Bank, Jens Weidmann, once said it was for the other countries to do all of the adjustment. It was not for Germany to do any of the adjustment.
So can I throw this one out there?
It's a huge mistake.
Is the concept of the euro, as it stands at the moment, flawed without major changes?
Well, what we've seen is lots of changes taking place already. I think that I had serious worries about the euro when it was first started because the structure around it, the institutional framework just wasn't there to cope with any crisis. And that was a serious problem. So a crisis comes, an individual country with low productivity, absolutely right, like Italy and Greece, would normally have devalued their currency, lowered their own interest rates, and done something to get back, the economy working again. Well, you can't do that when you are in a common currency, and that is the serious flaw that was there already. Yes, in order to deal with it, you don't leave countries entirely to themselves or even give them a little bit of money to get over it or a lot of money to get over it. What you need to have is a proper transfer of funds from the richer countries to the poorer countries or the ones that are least affected to others. Germany should indeed, just as you were suggesting, have done an awful lot more to get those countries moving again because you've left them with nothing. So what happens?
Dying to say
No. But what happens in those countries when you do that? If you have no ability to have any proper transfers, if you have, remember the Maastricht Treaty, which is the thing that got it all started, if you like, in terms of the single currency, which allowed for a single currency, had no bailouts in it. So you weren't even supposed to borrow. And you didn't have a central bank as lender of last resort, which meant Trichet, when he was head of the European Central Bank, refused to help Greece, for example, or print more money generally.
Again, what I'm trying to get at is, do we need not we,
Yeah.
because we're not in it in the UK, but does the Eurozone or somebody who's thinking about this need to make fundamental changes to the way that it's set up at the moment to correct the ills?
Well, I think there are reforms planned and in place that will make the euro system works better. I think we undervalue the importance of structural reforms. When we were talking about the fact that countries could have devalued in order to get out of the crisis, of course, what we being in the Eurozone implied is that instead of devaluing, they will have to become more productive. And that is, is kind of core to the whole functioning
easier
of the
said than
system.
done. So what actually
Yeah,
happened in
definitely.
the countries like Greece is that in order for them to become more productive, in inverted commas, this convergence that had happened before with the wages and so on had to disappear, and they cut wages, they cut spending, they cut everything you can possibly think of.
So
And
were they
that-
more interested in this last one, the sign of European identity and holding it all together, rather than actually looking at whether it was a realistic monetary prospect?
But the interesting thing is that even the Greeks wanted to stay in the euro because they believed that indeed this identity was very important, being part of Europe was. That does not justify, nevertheless, the way in which the structure was really leaving quite a lot of countries to fend for themselves, and the cost to be still carried through. So your question about is it fit for purpose, if you like, which I think is what you're trying, it will be when all the institutional arrangements have actually have put in place to allow for this to continue.
And will that happen when unicorns roam the earth?
Well, that's a very good question. I mean, who knows? But they are moving towards it. And as far as we can see, despite the economic hardship, people still want to be part of it.
Yes. I think I'm not against the euro at all, but it's fundamental for those countries that chose to establish it. But the actual setup is a big problem because it focuses so largely on public sector debt, which is not the key issue in the European economy's problem. And they made it even worse in 2012 with the so-called Stability Treaty that in effect tries to impose the balanced budget rule on all Eurozone countries. That is complete economic madness. And that is dangerous. So the reforms that are being put in place are important and make some modest improvements. But the next time there's a major crisis, and I'm not sure that we're yet heading towards that from the start of your program, then the tensions will come through just as strongly as the previous time, and nothing has really been put in place.
So nothing's really changed.
Well, it has, but not sufficiently.
It has. It's about moving towards a banking union. There is a lot more risk sharing. So they are slowly, and the European Central Bank is now the lender of last resort.
What
It is,
Valentina,
but it
you
doesn't always pick up.
let them
when
carry
it
on for
needs
just
to.
a second.
Sorry.
No, of course. You are Italian.
Yes.
Yeah. Italy is still locked in a bit of a battle with the European Union about its budget. Yeah, and we've talked about the fact that it's very difficult to set budgets of your own if you're sort of breaking the rules. You can't force austerity on people, which is what seemed to be happening in Italy. The people revolted. They voted in right-wing movements, if you like. So the political instability caused by the insistence upon certain rules is perhaps growing. Is that something you would agree with or not?
Okay, Italy didn't have much austerity at all. He had it for a little bit in the wrong moment, back in 2011 when it was the worst moment to have it. But then it didn't really have austerity. And Italy has the second largest public debt to GDP after Greece. So he's paying a lot of money in interest on his debt. These are monies that do not go to schools, do not go to infrastructures. So he has a problem.
So does the euro sow political discord rather than encourage accord?
Well, I think it was easy for the election campaign to ride a wave of discontent with the European Union. It was easier to take up other challenges, and it worked, and he created someone to blame for the Italian problem. But the Italian problems are Italians. I mean, the public debt of Italy is something that limits the spending on other things, because Italy has it, not because the
I'm sure you meant
Union.
the Italian problems are of Italy's own problems rather than of the Italians. That's
also
the beauty of
of the
Italy are the Italians.
Also
Philippe,
of
can I throw this one to you? Do you think it sows discord, whereas it was supposed to promote unity?
Well, for me, the main change in the Eurozone is what Mario Draghi said in London in 2012. It's to say, Eurozone was a political construction. People want to live together, and Euro is just a tool for that. And we have to keep that in mind. And this means that we have to create a political institution around that. What I mean there is that when we look at the European institution now, we create a framework with strong incentive. In Italy, for example, I discussed that with a German member of parliament 2 weeks ago, and he said, for Italy, we've created very strong incentive, very low interest rate, etc. And they have to change by themselves. And that's the weakness of Europe. I think that we need some more centralized decision maker, probably a federal budget.
A federal budget. We've heard it a number of times. Philippe, thank you. I want to come just to sort of, as we come to wrap up the program.
Can I just add something?
Oh, go on.
Italians still trust the European Union more than they trust their own government, according to the Eurobarometer.
But does that say more about the Italian government than it does about the European
Possibly,
government?
you interpret it as you prefer. Italians' problems are long-lasting. The GDP per capita, again, a level of how rich a country is about the same that it was at the beginning of the century. So, the problem of Italy are structural, and they have to be tackled in a structural way.
Can I quote Joseph Stiglitz? You probably know his work better than I do, Nobel laureate in economics. He's written a book called The Euro, How a Common Currency Threatens the Future of Europe. I can't claim to have read all of that, but I have read a couple of his articles. And at the end of one, he says it doesn't have to come to this, all of the problems that we've been discussing. Germany and other countries in Northern Europe can save the euro by showing more humanity and more flexibility. Are there signs of that happening?
There is a certain amount of risk sharing that's happening now. So we're moving a little bit towards having the types of funds that can then be redistributed. But it takes a long time for that to, and of course they're not big enough. The interesting thing about Germany is that it has continued, until recently anyway, to have large budget surpluses and current account surpluses. And the way that the system works is it penalizes countries that have deficits, but it doesn't seem to want to penalize countries that have consistent and persistent surpluses. So the signs are not that great.
And that's what he says. I'm not counting on them to change the plot. But my question to you, Jeremy, and say whatever you wish, but he uses the word humanity. And isn't this the problem, that the human side of this really hasn't been taken into account? It's been all about economic and political union and not humanity.
I think that's only true in part, but it was true in part at the time of the peak of the crisis, when I think the austerity policies were pushed through in an inhumane way, and in a way that actually helped French and German banks rather more than the people that they were aimed at. So this is at the heart of it. But I don't think it's fundamentally a problem of humanity, because the Germans and others are wonderful people in the round.
But it's not the people that have control over
structures.
Yeah, it's the people who put the structures in place.
But the German economy is very vulnerable, precisely because it's got this huge current account surplus, and because its car industry and others are facing major technological challenges. So I think this is going to be the main driver of change in Europe in the future. So I think there are some questions of human in politics, but I don't think it's right to put the structure of the euro or the effects of the euro too much into that kind of frame.
I posed the question at the very beginning, will it make it to 21? Well, it was a sort of,
Yes.
Of course it will. But does it have a long-term future, Valentina?
I mean, I don't think at the moment there is really the question, because 75% of Eurozone citizens support the euro as a single currency. I mean, most of the young people don't even remember the previous currency. So there is, as long as there is strong support of the citizens, then you don't have that question, really.
Philippe, thank you. Valentina,
Thank
Vicky,
you.
Jeremy, really appreciate it. I'm going to put this back in my pocket. And thank you for watching this edition of Roundtable. From me, David Foster, from the entire team, happy 21st next year, or the end of this year, in fact, to the euro. We'll be back sooner than that. Goodbye for now.